I guess you could say I'm pretty darn disappointed about what the Fed said after their particular report and their decision to hold. That was what we were all expecting, and that was good. But their hawkish tone, not so good. This is Randy Kirk. Hit like, subscribe, notify. And yes, we will talk about the magnet a little bit later. If you don't know what the magnet is, wait until later. All right. So Powell convinced analysts today that the market is too hot, that the economy is too hot, and that the Fed is very likely to increase rates one more time by another 25%, another 0.25 later this year, either in November or December. Calling it higher for longer, or this is what they've been referring to it up till now. And I think that pretty much from what I'm hearing from most of the analysts, nobody believes that. Nobody believes that they'll raise it in November or December. However, what was said that I think the market did respond to is that instead of 4 cuts in the rates next year, they're now only projecting and predicting 2. This is the number that I think everybody's keying on to. The Fed said, hey, the economy's doing great. Unemployment is doing great. They increased the GDP from 1.1 to 2.2 roughly. I think I didn't write those numbers down, but that's roughly what they did, almost doubled it in terms of the projection for this year. And they also said next year, instead of the 1.1 they were projecting for next year, they're now projecting 1.5 for next year. So that's also an increase, even though it decreased from this year. They said unemployment, which they expected would go as high as 4.5 next year. Now they're saying, no, probably we can keep it at 4, only go up to 4.1. I mean, these are all very good pieces of news. And he says, I think we can do all of that while keeping inflation in check. But because we're not sure, we might have to raise rates in November or December. And also, we are not going to plan for as many cuts next year as we had said before. Well, the market didn't like any of that. So the market was definitely fell badly after all of these, as the Fed chairman was speaking. And then when he was done, there was definitely a little bit of blood in the water. I think we will see that this amount of taking money off the table today will not sustain. I think we've got the PCE next week, the index that the Fed claims is their favorite inflation index that comes out next week. And I would not be surprised to see that we get some better numbers out of the PCE. A large number of analysts, and definitely the Fed, keep talking about the fact that getting core inflation down from, say, 4% down to 2% over the next 12 months is a very hard slog. And I would agree with that, except for my favorite topic, which only came up in a single question by one of the reporters there and was not really dealt with by in the chairman's response, and nobody else brought it up at all. And that's productivity. And I'm sorry, but I'm a Cathie Wood fan, but I'm also somebody who's been a fan of productivity before I knew who Cathie Wood was. If you have enough productivity in the marketplace, if you have a good enough improvement in productivity, that improvement in productivity will drive prices down, even if you have a strong economy. So yes, of course, you could have such a strong economy that there's not enough goods to go compared to the number of dollars that are out there that want to spend it. And that is always going to be true. But if you have a relatively normal economy and you have strong productivity, which is what we appear to have right now, and which makes sense in terms of the comparative figures for last year, even as we go into the end of this year, beginning of next year, we should see very strong productivity numbers. And it's, of course, not really about the numbers. It's really about what's happening in the economy. If companies are more productive, they have larger margins. They can make more money. Their profits increase. And then if their competitors feel like they want to grab market share, then they will lower prices rather, and then that forces the competition to lower prices, and that's how productivity works. Does that make sense? If I haven't explained that well enough, please say so in the comments below, and I'll be happy to do another complete report on productivity and how critical it is. But whenever productivity gets into the marketplace, it creates the opportunity to lower prices because your costs are lower. I think Tesla will be a great example of this. They're becoming more and more productive at making the vehicles that they make. Their labor cost and their cost of raw materials is less. Their cost of processes, procedures, and overhead, all those things are less as a percentage of the overall selling price of the car. That allows them to lower the selling price of the car if they choose to, or they can make more profits. Those are the two choices. And we see that playing out, especially this year, as we've gone through all the business about cuts and how that impacts the bottom line. So if you weren't an expert on this until this year, by now you should really be an expert on Tesla basically giving the world a productivity lesson and how important it is in terms of being able to control markets. But it's also important in terms of the inflation issue. So Tesla is trying to lower the cost of their vehicles in order to make electric vehicles more appealing to the public. And as they do that, then people buy more electric cars, which allows them to get even better economies of scale as they make more and more, and that their purchases of raw materials become lower, their costs become lower and lower because you're buying more and more, which always results in lower costs. And of course, as you make more, you should be able to lower your costs of manufacturing each individual unit. So maybe that additional explanation will help. Anyway, the Fed continues to acknowledge the fact that we've got this whole issue with housing that is affecting the overall inflation number. They said that oil is not going to be a big issue on their table right now, that they understand that oil prices are going up, but that is a fluctuating item that they pay less attention to, although it does, go throughout the entire economy. But they are looking very hard at these data, and they continue to say, look, if the data tells us what we want to know, then we will do something different. He emphasized over at least once, maybe twice, and everybody afterwards been emphasizing. Chairman Powell said, what we're showing you is not a plan. We're not planning for 4.1% unemployment. We're not planning for 2.5% inflation. We're not planning, for a GDP of 1.1 next year, 1.5 next year. These are our expectations based on the data that we have to work with right this minute. And as all of the different people that put input in, as they do their spreadsheets, looking out into the future without crystal balls, we take that average of all those 18 people and we say, okay, here's what we think is going to happen over that time period, given what we know and given what the Fed is doing in order to encourage or discourage certain things. Anyway, so it's not a plan. It is a reflection of what is known now, extrapolated into the future. But there's so many things that are, as several people said, you get 7 economists in a room, you'll get 9 opinions or something like that. I forget. And it's an art, not a science. And they don't know because there's so many things that could affect. I mean, right now, they mentioned a bunch of them. We already know what they are. Oil prices being up. What's the real effect of that? How high will it go? Will it come back down? That's going to affect the economy. What about the people starting to have to pay off their student loans again? Is that effect going to be immediate? Will we not really see the effect for a couple of months? What about people paying higher interest rates? There's a lag effect in terms of people not being able to pay their bills. And all of a sudden they go into default on some of their car loans or some of their personal loans or even their mortgages, on some of the newer mortgages that are over 7% right now. Some people might not be able to afford those going downstream. So these are all issues. We got the war in the Ukraine. We have lots and lots of things that are out there that could affect the economy that are not being modeled out correctly and that could be a major impact. Like, for instance, productivity, which is what I'm counting on to bring down the PCE in September next week and in the October print at the end of October. And if the productivity numbers are really having the impact I think they are, we should see those numbers beat the numbers that the Fed is expecting, and that could cause them to be able to pause throughout the rest of this year, which I think is really what's going to happen. Now, one more thought on that, though. The Fed even said this. I've told you this before. So Powell said it. Lots of the analysts afterwards have said it. I said it months ago, and that is another 25 basis point increase in the Fed fund rate is not going to have a major impact on anybody. Okay. It's going to have an impact, but it's not going to be a major impact. Over the entire economy, that is not going to be a big deal. After 5.5 point increase, you add another 25 basis points. No, it's not going to matter that much. So that was Powell. So he knows that doing this one more time, it's not going to have that big of an increase, not going to be that big of a deal. So that's part of how I think they're going to weigh it out. And that's why I don't think there will be an increase. And I even think the data between now and then will help them not to do that. Okay. What about Tesla today? Well, first of all, the overall drop in the prices on the Dow and the S&P and the NASDAQ were not horrific. And I think over the next few days, it'll kind of work itself out and we'll kind of be back to normal again. But the PCE next week, that'll be pretty important because that could restabilize the narrative for the market that everything's okay, inflation's under control, and in fact, there won't be any increases later this year. And then we could be back into kind of the bull phase. This 10-day period, by the way, somebody said the other day, this is the worst 10 days of the year on average. So I don't know if that has anything to do with Powell speaking or not, but but I guess over some historical period, this next 10 days is one of the worst possible periods. So the dollar was stronger. Of course, the dollar's been very strong and it will continue to be stronger. Stocks were down, but not that crazy number. But we also had the Tesla situation, which was very weird. Still haven't been able to figure it out. So Tesla had this big run up, 6 points. And then it played around in that 6 point, and then it dropped and up, and it's 4 and then 6 up. And then when Powell spoke, it dropped 9. And it ended up being down just a little bit, 1.5%, after being up 2%. So a big swing after Powell spoke. Don't know why it was up. Still haven't been able to find any news or anything else. Maybe there was a some big whale that decided to buy in at that point. I don't know, but it went up dramatically, counter to the rest of the market. But then when the Fed spoke, it went down and ended up still doing better than the overall market, doing better than the Magnificent Seven, who all did rather poorly today. Most of them down 2%, some more than 2%. NVIDIA down again. So, and then the Cathie Wood stocks also were down pretty much more than Tesla was, and the NASDAQ was down more than Tesla was, or close to about 1.5%. Anyway, so Tesla did okay today compared to the rest of the market, but was down at the end. Now, I want you to remember, coming up later today, I'm going to go over this stuff again, but I'm going to go over it with a bunch of help, and that's going to be with Larry Goldberg. And we're going to talk this through along with other stuff that happened this week, not just the Powell thing. We'll probably only spend 5, 6, 7 minutes on that. And the rest of our time, we'll be talking about every aspect of what's going on right now with Tesla, what's going on with markets, what's going on with the economy. So I'd like to have you back. So hit like, subscribe, notify. The notify is so you'll be reminded to come and hear Larry later. And then you want to join Patreon. I'd love to have a really good month for Patreon. Lots and lots of folks joining Patreon. Now, some of those people that are joining Patreon might be doing it to support the channel, and some of them are because they're joining at the $5 level, which doesn't help them get one of these for free. You have to join at the $10 level to get one for free. I had somebody earlier today who joined for free. So they got the $10, got they joined for $10. So they get one of these for free. He said, but I want to buy 2 more. Well, the deal is if you're a Patreon member, you get these for $20 a piece. So he bought 2 more along with the one, or was it, I think, yeah, total of 3. Anyway, and so those are now going to be on their way. So you can do the same thing. If you want to join Patreon at the $10 level, because you want to buy a bunch of these to give to your friends and neighbors, you can get it for $20. And if you don't want to join Patreon, then it's $25. By the way, that's including freight, unless you're outside the country. And then it's going to cost you $25. In case you don't already know, it's a bottle opener and it's a refrigerator magnet and is 3 millimeters thick, the same thickness as the stainless steel on the Cybertruck. Very cool thing. Everybody loves it. Everybody that's received them is just really remarking how much they like it. And then, of course, it also comes in camo. Let me just show you that real quick. So $25 per unit. Send that down to by using paypal.me/Randy Kirk, all in lower caps. I mean, lowercase. And all that information should be down in the description so that you can join Patreon or you can pay me directly. And then we'll look forward to seeing you later today with Larry. It's been great talking to you.